Welcome back to the Plaid Show. Dave Briggs, Brad Smith. We welcome in Thomas Hayes, Great Hill Capital Chairman and Managing Member, to talk about the market action today. And of course, Thomas, this big deal, Elon Musk, as anticipated, $54.20 per share, taking Twitter private, a value of $44 billion. We'll just give you a big blank slate. Your reaction to this deal we had anticipated for a number of days.
Of all, I think this is the best thing that's ever happened to Twitter. Twitter had become an abandoned building with graffiti in a bad neighborhood. And what's going to happen now is Elon Musk is coming in to buy this building at distressed prices. He's going to clean off the graffiti. He's going to rehab the building. He's going to make the building bigger and I think generate a lot of value for the users. I also think you're going to see a lot of major influencers who have been inactive on the platform that have built large followings that start to get active again. And if anyone can kind of persuade them to do that, it would be Elon Musk. He has quite a social network, and I think it's going to be a great thing all around.
Tom, what do you expect that the user value would be that would also translate into shareholder value?
Well, I think it's going to be a safer place to go, number one. I think you are going to see a cleanup of some of the things that are unsavory about Twitter. I think if anyone can do it that has the technological mind to do it and attract the talent to actually execute on his ideas, it's Elon Musk. Everyone wants to work for Elon Musk that has that background in computer science, et cetera, and they'll get it fixed. They'll get the bots fixed. They'll get the spam fixed. They'll get the fake accounts fixed. So it may be a couple steps backward before many steps forward, but he'll get the job done. That's going to be a tremendous amount of value. And I would say an IPO is coming to a theater near you 3 to 5 years out at probably triple the valuation than what he bought it for here.
I'm curious why you think it's going to make Twitter a safer space, given that he has said his desire for more free speech will invite back some of the voices that have been banned for spreading misinformation. And also, if I'm a shareholder, if I'm someone who thinks that Twitter is going to grow, what do you make of his statement at that TED Talk that this is not a way to make money, he said prior to buying Twitter?
Well, let's put it in perspective, Dave. This is a perfect example of an asymmetric trade. Very limited downside and unlimited upside. Why is there very limited downside? There's very limited downside because you've had a board of directors since the IPO in 2013 that delivered absolutely zero value to shareholders. The fact that they even took a couple of weeks to consider this offer is mind-boggling to me, considering the stock price is the same over the last 9 years while tech has absolutely boomed. So they should be embarrassed about what's happened over the last 9 years, and they should be grateful that Elon Musk came in with such a generous offer and his ability to turn it around. I think he put it clearly when he said he would like to see a situation where the hardest 10% on the left and the hardest 10% on the right are equally unhappy with the platform. And I think when you can kind of create an environment where those extreme views aren't going to be the happiest people, and where most of the people are, which many of them have left, will feel comfortable to come back, is a value proposition that is going to be very attractive moving forward.
Do you believe that Elon Musk needs to be the CEO of Twitter for these changes to happen? And if not, who is the executive in the changes that you've mentioned that are going to come forward? Likely that we're going to see in a major executive overhaul here.
Yeah, no question about it. I don't think he is going to be the CEO. I don't think he needs to be the CEO. I think it's 5 or 6 key ideas that he wants to see implemented. And my guess is he's got a stable full of people at Tesla, at SpaceX, at the Boring Company that are never going to be CEO in those companies that he may actually place into Twitter that he knows are competent, has a long track record with him that he trusts implicitly to carry out the deeds and get things done.
I promise we're going to back away from the Bluebird momentarily, but just a few more. And if you're a shareholder at Tesla, how do you feel about this deal? Their shares down just under 2% on the day, but is there the chance he just gets distracted? Now, clearly, Twitter is the marketing budget for Tesla, which serves them well. But are you worried about him taking his eye off the ball?
Not at all. I would be as concerned about this as I was about the Hyperloop, as I was about the Boring Company, as I was about SpaceX. At the end of the day, this guy seems to be able to get everything done over time. Sometimes he comes in a little later than expected. But to your point, Brad, which was absolutely spot on, this is the marketing machine for Tesla. And what you're going to see over time, maybe a few steps back before many steps forward, is we're going to have many more users on Twitter, many more engaged users, and those are all potential Tesla customers, which Elon Musk, I'm sure, will be more active than ever because he's got 44 billion reasons to be moving forward.
I'm not sure I can take credit for that idea, but I know that we've discussed it before, Tom, for sure. You know, while we are continuing to have this conversation, naturally the question comes up, this environment that we are in right now, where we've seen a tremendous amount of activism over the course of this year. This was originally a quote-unquote passive stake that Elon Musk was taking. Narrator, we see how that's played out. And so with what we are watching in the market environment going on throughout the rest of this year and some major activist campaigns, are there similar efforts that you are expecting elsewhere in the broader capital markets right now?
Yeah, well, that's an interesting question. The number one area that I think you could see a tremendous amount of M&A activity, which has fallen to a low in a sector that was left for dead on the basis of interest rate fears, is biotech. Biotech is trading at a huge discount, its lowest price to sales in 10 years. There is a lot of potential M&A activity there, particularly because if you look at the Russell healthcare sector, large healthcare and pharma has about $400 billion of cash on their balance sheets. There are many patent cliffs coming forward for big pharma. So they don't have any innovation, but they do have a lot of cash. And where are they going to find that innovation? They're going to buy it from biotech. And if you look, by the way, at the sector, is so beaten down since the fears of the interest rate hikes have come to bear. If you look at the average multiples since 1986, the sector would have to appreciate 24% just to get back to average price to book, 155% just to get back to average price to operating cash flow, and 111% just to get back to the average forward PE. So I think the number one place you want to be paying attention to in the next 12 to 18 months for a lot of M&A activity and a lot of acquisitions is that which has been left for dead, which is biotech.
I think the number one place that I am looking right now is at Jack's Twitter feed to see what he replies to first here on the day. Thomas Hayes, who is the Great Hill Capital Chairman and Managing Member, joining us today. Tom, always appreciate the time and conversation.